This is Greg McLeod from the Elite Traders University and the Forex Cash Machine. And it's so good to be with you on this wonderful Wednesday. It's hump day, and I'm going to present to you the ECB rate decision analysis that we're going to do in just a couple of minutes, because the ECB, the European Central Bank, is going to announce the rate decision tomorrow, and we're going to map out a plan of how we're going to attack this announcement, how we're going to trade the euro. So we can basically call this like how we're going to trade the euro tomorrow. And so I thought I would give you like a heads up, because I will be trading it live tomorrow. But you know, if you fail to plan, you plan to fail. So we're going to do a little bit of a plan here. And so hopefully my voice is coming through loud and clear, and that you can hear me, if you can see me. And I know this is kind of a last minute, just like that, an announcement there. But I was having some technical problems, but I think we've got them all ironed out. And so I'm so glad to be with you today, to be able to let you know what I'm thinking about the European rate decision. Okay. So before we get started, I want to go ahead and let's address the risk disclosure on your screen. Before right here, we're going to go to our risk disclosure. Make sure you understand all the risks associated with foreign exchange trading, and make sure you get a full view of that. And a little bit about myself for those of you who are brand new to the channel. Either you're new to Facebook, new to YouTube, you just joined. Again, my name is Greg McLeod, and I'm the CEO and founder of the Elite Traders University.com. And I'm a 25-year trading veteran, and I trade everything from stocks, commodities, forex, crypto. I'm one of the foremost authorities in short-term scalping called day trade. Short-term day trading called scalping, right? So I get in and out of the market very quickly. That's what makes me unique. That's what makes our company and our training unique, is that we help traders make money fast with quick trades. So they're not buying and holding and staying in trades for like ages. You know, all that buying and holding, very risky. You know, you saw the overnight drop we had in the Dow and different indices we had on Monday. They rebounded, but if you were in and out of the market and were flat, you could sleep at night and not have to worry about overnight exposure. So if you want to find out more about that, you can go ahead and go to the 4 Pillars of 6 Figures, the banner that's going across on the top, and you can actually learn more about what we do as a company. And if you want to maybe set up a strategy call, speak to one of our enrollment specialists, see how we can help you solve your forex problems and help you become a more profitable trader. Okay, so let's get right to it. I want to look at the our tools here, and okay, I am in the euro now, but I'm actually short. This is my market heat map. It's my market heat map is one of my tools I use for, it's an all-purpose, like a Swiss Army knife. It allows me to be able to scan the market very quickly, find opportunities. It also has a lot of different features as well. You know, first of all, the heat map is the core product, which allows us to scan different, you know, which is the most active pairs, which is, you know, what instruments are actually moving, like natural gas. We have Bitcoin Cash, Ether, that's up in the top spots, and we saw things are trending down in red, like the pound yen and also the Aussie yen, and also the Aussie, which is down. So we can have a whole view of the market looking at these. We can also even drill down to even smaller sections. We can look at just the forex majors and see how they're looking ahead of the ECB announcement. But it's a very quick, a very time-saving device when it's loading. Like this is live. We're dealing with live, right? And we're dealing with live. We could probably go from here. Let's go. We can go to the forex majors here. See if that loads up quicker. And she's a loading, right? Could this be my computer? But let's go ahead and go right to the. Here we go. That's our one heat map there. And while that heat map is loading, we're going to go right to the economic calendar, and that's what we're going to be looking at. And that should load a bit faster there. Okay. And then we should go to, so when we go to the economic calendar, we want to look at the reason why I like trading the news, and especially the ECB rate announcement, is because it generates a lot of volatility. Okay. We get really quick moves in the market, and that way we don't have the overnight exposure. We're not in the market for a very long time. So we can look at for tomorrow, and we set for high impact items. You can see the euro is going to be big, the currency in play, and then we're going to have the Aussie dollar later on. But at 7:45 Eastern time, we're looking at the ECB rate decision. It was widely expected they're going to keep rates like at 0, right? No, I mean, you're not going to, it's like, oh, I wonder what they're going to do with their rates. I think they're going to be 0, right? How about probably next year? 0, maybe. Okay. So what is the point of having a rate decision if we already know what the decision is going to be, right? So it's not so much what the decision, we already know what the decision is going to be, but how the market reacts at that point in time. That enables us to either buy it or sell it based on what's going on here. Now, we're going to do a little bit of analysis, so we're going to get a little bit of a heads up, because when there's billions of dollars, I mean, the forex market is $6.6 trillion a day. Okay, so I mean, compared to maybe crypto at $94 billion a day, or even the stock market, the forex just flattens out any other asset, right? But there's periods of time like around now where it's not moving a whole lot. And so we want to be where, when there's volatility is like the wind in our sails. Our trading accounts like the sailboat, and we have too much volatility, it could tear us apart. But if we can catch that big blast of news, it can really give us a lot of money very quickly, and that limits our risk, right? So I wouldn't I tell my students, my mentorship students, they are very dedicated. They will go online, they will go to Bloomberg, they'll go to CNBC, and they'll read everything about a fundamental announcement. And they're good students. And I tell them, don't be a good student. I don't even know. I don't know what exactly going to be said in the statement and the policies and all that stuff. All I know is that at 7:45. So they're going to give me a time. They're going to give me a time, they're going to give me a currency pair, and they're going to give me a direction. Okay, so I got 3 things. So that means I can eliminate all those currency pairs that you see behind me. I only have to look at one, or actually a family. I would look at Euro Yen, Euro CAD, Euro Swiss, Euro Pound. So I'm looking for at the Euro complex. I call it the Euro complex, where a bunch of currencies versus the Euro. And usually they will move together in a pack, and they'll move up and down this currency heat map together, right? They'll drop together, they'll rise together. And if there's independent news in a different country, like Euro Yen, like yen has had some bullish news, so maybe the Euro Yen might act a little differently than the others. But for the most part, they kind of travel together. So I really not going to get into a lot of other analysts on the man or something like that will go into, the flows of this and that, and the GDP and the M2 money supply and velocity of money. I'm not, I just want to make money, right? That's what you want to do, make money, right? So I'm just telling you the 3 things you look at is time. The full flag tells you what currency, and they also have the currency that's going to be impacting, right? So I just look for those 3 things, and I also want to see the high impact. Okay, if it's low, there's a whole bunch of them. If you look through all of them, there's a whole bunch of them, right? Bunch of announcements. Most of them, nothing happens. Sometimes the medium ones can move. If you're there's no, today, there was no high impact items, but tomorrow there is this one. That means all eyes are going to be on the euro with Christine Lagarde, who's president of the ECB. What she's going to be saying, everything's going to be focused on that. So trading the New Zealand CAD because I like trading the New Zealand cut. It's not going to work out for you because everybody, the party is going to be in the euro. Okay. The people say, well, you know, you can't, there's no certainties in trading, and there's all kinds of, you know, anything can happen in trading. There's no certainty. Well, I know for sure, unless, zombie apocalypse or giant meteor strikes Europe. 7:45, we're going to have that announcement. It's going to impact the euro. So I've eliminated all these currency pairs, and I'm focusing on one. So look, now basically I taught school. I taught middle school, and I taught high school, and I taught adult school, and I actually did a stint teaching college for a little bit too. And I made quizzes, right? And the quiz always has like 3 types of questions, right? The one that's absolutely correct, another question that sounds almost correct, and one that's totally bogus, that's totally wrong, right? In this equation here, for this quiz that we're going to be taking tomorrow, is that there's actually, okay, question 1, what currency are we going to be trading tomorrow? Can I get a lifeline? Can I call my friend? No. The euro. Okay. The euro. Say with me, the euro. Euro. Okay. So what time are we going to be trading this? Oh, maybe about noon when I wake up? No. They give you the time. So they tell you when they're going to move it. 7:45. Okay. So I've got my currency. Check. I got the time. Check. Okay. Now, the next question, is it going to go up or down? Okay. Now but look, you've eliminated what to trade, when to trade, everything's been eliminated. So now you've got the last question is either up or down. Okay. And this is where we use technical analysis to be able to narrow that down. So when it happens, we're a little bit ahead of the game. Now, if you were a pip and run graduate like John Contenbile, big shout out to John. He just tore up. He just turned Kiwi yen inside out. Just beat down that currency. Just extracted money like nobody's business, right? Very proud of him. And also Mira France. That's her code name. And she's crushing it too. So, if you are in our group, you will. So this is John. And pipping and running. Oh my God, I didn't see that. 67 pips, 64 pips, 59? Dude. Wait, I need to call him. I need to call John up. John's in California. I'm gonna give him a call. Yeah. Wait, what did you? Dang, dude. Yeah. So he's a pip and run graduate. Another pip and run graduate that we had. Here's Mira France. Don't let your work kill your dreams. Grab 391 pips. Now, here's a YouTube video where she did 292% or something like that. So she's an overachiever there. But let's take a look at that. And 2 losses and all green. And probably these trades didn't take very long. She doesn't have the time on there. But just massive gains. And a big shout out to Mira France in our... Oh, I think I just made money too. I guess I want to get to that. Okay. Here we go. All right, so I was short. I gotta go on to see that. I just heard the swooshing sound, right? And so this is the euro. Okay. Now, euro. I'll show you how I have this chart set up. I have I'm going to teach you a lesson here. We use a dual screen approach, okay? And the reason why we use that, because a lot of traders, they're victimized they make the mistake of only looking at one time frame, one time frame. And what happens is they suffer from something that Alan Farley, a famous trader, called time frame relevancy error. That is time frame relevancy error, where you're looking at a chart and you think it's an uptrend or you think it's a downtrend, and then you stay in it too long because you're really in a retracement. And the only way to figure that out is to look at the higher time frame, right? Looking at the higher time frame. The euro is kind of an interesting animal because it has been trending down for a while, but it has trended down to a significant level of support. Now, I have a couple of things here. I have a 733 period moving average, and I have an S1 pivot. Pivot points are commercial support and resistance levels. They are based on simple mathematics where they take the high, low, and close the previous day, divided by 3 to come up with something called a central pivot. And that central pivot is basically the typical or average price of the previous day. So the typical price. They call them floor pivots. So pivots can be areas of support and resistance. What I want to show you is Fibonacci, and I actually have that video. If you want that video, access to that video, make sure you put in hashtag no FOMO in our group. If you come over to the Forex Cash Machine group. And so what happens when we get these big breakouts, right? We can come back and get in them at areas of support, right? And this is why I wanted to show that we had this huge breakout last night, and we went from a low of 1.1752 all the way up to 1.1805. Call it the 1.1800 handle. Okay, so and it was an R1 pivot. So R1 are resistance pivots, right? Based on the central pivot, and S1 is our support pivot. Now, what I'm looking, and I just took this as an Asian session trade because I really thought that I would get some positive swap by being short the US dollar. That's interest that you get for I went short at here at 1.1794 and closed it down here at 1.1787. So it was 7 pips, pretty quick. I had 10 standard lots, so that was $3,071.25. So I entered in this at 15:49. Really, it was like 4, almost 5 o'clock, right? And then I got out a few hours later. Okay. So we got this push down to this level. Okay. Now, time relevancy error would tell us something like this: that this is moving down, so therefore we're going to stay short. But by having something like this, we see this huge move off the lows. We actually have a nascent uptrend. If we just connect this wick, and this wick like that, and then project it into the future. So I'm going to extend it to infinity beyond. Boom. Okay. So this is our 1 hour chart, which we call how we trade. We look at, looks like when you're watching a 3D movie, you got to have both eyes so you can see to really truly get that 3D experience. So when we look at price, and this will probably just improve your trading 100%. If you, whatever time frame you like trading on, maybe you like trading in the 5 minute, maybe you like trading in the 15 minute, but you want to go to a time frame that is about 5 times bigger than the one that you're currently trading. Okay, and I'm not going to work out exact, right? And let me just show you. This is called multiple time frame analysis. The MTF. Do I have something here? Oh no, MUL. This is Greg's interweb. Oh, spell that right. Analysis. Okay. So what we're trying to do is to trade in the direction of the trend. Multiple time frame analysis. Okay. Oh, okay. Let's do this. Okay. I think I had a hashtag or something. I forgot to put the hashtag. There we go. So multiple time frame analysis. You may want to screenshot this chart, but we have what we call the compass chart and our trigger chart. And on our So if we're trading off the 1 hour, then we want to look at a 4-hour chart as our compass. Okay, that's our long-term chart. And what we want to do is to trade in the direction of the compass. The compass tells us the direction, just like a compass. You guys know, what's a compass, Greg? It's like the GPS of like the pirates, okay? That thing that spins around and it's magnetic, okay? And I know, because I might be using terms like, you know, Greg, you're old enough to use a compass? Did you come over on a covered wagon too? It's like, no. No, but a compass is used to find direction. And so if we look at the direction of the chart and we see that it's up, and I'm looking not just like going back too far, I'm like talking about maybe the last swing low, and then looking at the hourly chart, right? And it's almost 5 times difference, right? So daily to weekly, there's 5 days in a week. So if you're looking at a daily chart to trade, 5 times the daily is weekly. 4 hours, well, you know, there's actually 5 4-hour trading, because 20 hours of trading. 5 times 4 is 20, so it's a day. On hourly, well, there is, if you're looking at a 4-hour chart, well, it doesn't fit equally. It's like 4 to 1, but it's not 5. We don't trade off of 5-hour charts, so hourly and 4-hour. 15-minute and hourly, because 15 times 4 is 60 minutes, which is an hour. 5 minutes and 30 minutes, well, it's really, nobody trades off of a 25-minute chart that I know of. I'm sure people do, but the closest that we would come that we normally would trade is a 30-minute chart. So we look at our 30-minute chart trend and use our 5-minute chart to look for entries in the direction of the 30-minute trend. And we go on down the 1-minute chart and that way. Okay, so hopefully that's clear, right? So so what I did here is that we actually had another trend line. We had a trend line break, right? And we had a bearish candlestick pattern. So we were looking for we have a pattern, and we had multiple rejections. We have basically almost a double top here, right? Now, I'm going to tell you how I entered this trade. This trade, I believe, is counter trend. And I took it because I know I'm not going to be, I wasn't in it very long. And I'm just to pick up $3 why not, right? Would you? So tell me in the chat box, right? So we got a rejection. Price rallied up, pulled back, and this is a bearish candlestick pattern here called an evening star, right? It's kind of like, it's like a shades of gray evening star. It's a doji evening star, because you have this kind of like doji. There's a bullish candle. This was a bullish candle that was smacked down, turned into a long wick candle, and the direction of the wick is like Pinocchio's nose. Hey, you know, it's the opposite. It goes in the opposite direction of the wick usually. Okay, so we've got that, and when it broke the trend line, I got short, and then my target, actually target would have been like the 38% retracement, right? But I actually, yeah, I didn't stretch that down. Yeah, I was getting ready for our presentation, and I was looking for this pullback. Now, this is very interesting because I said, well, Greg, you know, this is, you know, it's trending down. So this is where the relevancy error. If this is an impulse move or a push up with strength, we look for prices to either stop at one of these key areas, either the 38% retracement at one spot 1784, or at 50% retracement. What will happen is that price will stop at one of these key areas and then turn and go up. Okay. Now, since we are in Asia trading, and usually Asia is the counter trend. Okay. So so dropping some more information bombs and let me know in the chat box if you like it or not. Give me some thumbs up, give me some hearts. Let me know that this is helpful. But usually, London fades Asia. So whatever Asia's doing is usually profit taking. These guys got long here, they made money, and now they start selling to take profit. This is called an orderly profit taking decline, right? It's not declining because it's bad or people like Greg are shorting it, because I'm not short now. I got out. I'm actually flat. Okay. And I mean, I got flat. I mean, not too far from it's reversing and acting funky right now, right? But, and you notice the angle, it didn't just drop like this, went sideways, and look at that drop. This is a vertical, just straight drop, right? This is dropping at an angle. It's like arm wrestling someone and it doesn't go all the way, right? So we've got this kind of like pushback, right? Now it's early yet. It's about 9:12, and we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, almost 12 hours before the announcement. Okay. So I'm like saying, well, and I wouldn't take any trades. So what happens is you guys will say, oh, this is going down. I'm going to short, and I'm going to stay short, and I'm going to go for 100 pips. And this thing is making higher lows and higher highs, and now it is looking for support. And it hasn't gotten to a decision point where it's like green eggs and ham, Sam I am, another Dr. Seuss classic. Oh, I don't like 38% retracement with my ham, Sam I am. How about the 50? You like the 50% retracement? And so price will drop and test it. No, I don't like it. I don't like the 50% retracement. I think I want to go lower. And so it'll try each one of these areas until buyers will step in, and then price will rocket. Now you're like saying, well, Greg, I don't have to wait for this one. You're talking about short-term trading, getting out fast, and I got to sit and watch this stuff. You can, or what you can do, a cheat way of doing it. You guys want to hear the cheat way? I shouldn't tell you the cheat way. My pip and runners who paid a lot of money will probably say, well, Greg, don't give them that. Come on, guys. Where is your sense of giving and charity? Okay, this is good. You guys gonna like this. Okay, this is an order type called a buy stop. A buy stop. It's like, look, mom, no hands, right? It's kind of like cruise control in a way, but it's not like autopilot like in the Tesla car or something like that. What you can do is you can right-click the chart. I think you can do this on MT4 as well, and you can choose a buy stop, right? And you click that, and what that does is if price bounces and comes back up, it will enter into the trade, okay? And you're saying, well, Greg, what if it turns around? Well, this is kind of a pattern that I'm showing you. Usually, when it bounces from one of these areas here, when it bounces either to here, I'm going to make another color that's differently. How about the yellow? They call me mellow yellow. Yellow! Okay. Oh, I have to do it again. Okay. All right, try this again. So it may drop here and bounce. It may drop down here and bounce. It may drop down here and bounce. It'd be cool if I did something like this, like different colors, right? That'd be cool. How about blue, right? But if this one dropped and bounced from here, and maybe it was purple, okay, and maybe this one's I keep yellow, right? So it could come to any of these areas, but guess what? They all cross this line, right? So I don't have to. I might miss out on pips trying to pick the bottom on this. However, my old target will be the old high right here, but then it probably will not stop there. It probably will go a little bit higher. If we're triggered, this is TP1 is the old high, right? So the first stop will be 118.04, right? And And we can actually place, we can even place our stop below that current area, or the 38% retracement if we think price gets down there. That's an 11.7 pips stop, right? And then we could move our take profit, right? We can move it up to there, 118. But this is what happens with Fibonacci. We saw what happens with Fibonacci retracements, where, and there's computer programs, algos, hedge funds, all kinds of things which are looking at these levels, and they have buy stops at those levels, right? They have some serious buy stops. Because when we have a Fibonacci relationship, it's like a feeding frenzy. Let's say we drop to the 38, which happens to be the central pivot and the 38% retracement. Let's say price hits there, and that will be 1784. Okay, so the price comes down here and bounces. It will automatically trigger to go to either this level or this level. 18, that's one spot 1816, right? But according to H.M. Gartley, who, the guy who invented the Gartley harmonics and the Gartley sharks and all that stuff, we would have 100% expansion, and that would take us to one spot 1837. Okay, now that's pretty cool. If we had a buy stop, look, mom, no hands trade, where we go from basically 94 to 37. That is like 6, and 37 is 31 pips. So it's a 31 pip target, right? And if you set that up like that, and basically we're risking 11 to make 42, right? If we get to the 100% expansion. Actually, 42 pips. It says it right there, not 37. So we would look for some type of a pullback to one of these areas. And what we can do, we can even with C-Trader, if you have C-Trader, and especially if you want to check out Skilling. Skilling is a great C-Trader product, Skilling brokerage. And you can tell them, say that Greg McLeod sent you over there. But we can take this and trail it down. Right? So let's say this drops down to the 50%. Let's say it drops down here. Let's say price gets all the way down to the blue line, and we happen to be up. And you say, I'm not buying that. We can move this to the 38% retracement, right? And then, so if price drops, this is called a trailing buy stop. Okay. Now I would love a platform that have built-in trailing buy stop that would automatically keep moving this trigger line. Because think of it, it's like a trap. Like, you ever watch those movies, those action movies, where the guy takes a tripwire and connects it to like some explosives, and then the guy trips over it and then blows up or something like that? Well, that's kind of like that, except nobody blows up and everybody's okay, which is a good thing, right? So this is our tripwire. That's the wire. Price is like the guy walking upstairs. He trips over the wire and boom, the trap is set. You're in the trade, and then boom, it hits the next resistance. You can take partial profit if you have partial profit feature on your platform, or we can get a little bit higher because our target to be 100. The 1.618 would be like the monster target at 1.187. And if we were to move our take profit up there, that would be 78.2 pips. Or if you're trading 10 standard lots, it's $7,820. Not a bad payday. On a 100K lot, that's like $780. And if it's a 10K lot, $78. And if you're trading a 1K lot, it's $7.80. So it's a pretty good move. Based on a couple of things. You go, well, Greg, how can? And then I'll show you the bearish. There's a bearish scenario to this. So it's not all. And look at that. We're dropping 30%. Watch this. Okay, I'm gonna actually take this short. I'm not gonna go that low. Okay, I'm gonna take this short, And let's see if we can limit out on this before we finish. Okay. Um, Only because 23% retracement rarely ever holds. And usually if we break 23, we hit 38. Okay. That's like one of my things. So right now I got short. Again, this is for educational purposes only. This is not a, don't say, oh, Greg, I bet everything and I lost everything. I'm coming after you. No, this is education, guys. So here we go. So we're looking for price to possibly we can pull back to 38% retracement or 50% retracement. And I had something I wanted to show you, and I just completely lost my train of thought. Just that quick, right? That's what I wanted to show you. The volatility, the volatility, the news volatility. Okay, most volatile news reports. Now, I know we traded U.S. What was it called? U.S. Retail sales last week. It was pretty dead, and normally it's an 80 pip move, and it didn't move a whole lot. FOMC is about 60. That's the central bank news. ECB is about, roughly about the same. So between 40 and 60 pips, the most volatile news report. So, we're looking at walking away. And then another thing we can also use, let me show you, I'm going to open up another chart here. Okay. I'm going to go right here. I'm going to go to a daily chart, and we can find out how much gas that's in the gas tank of a particular currency pair. And this is using something called the ATR indicator. ATR, or you can use ADR as well. Average true range. You can use average true range. Yeah, and then you can see for the last 14 days what was the euro, right? We can see actually. The average daily range is about 52 pips. You look at the last, not the last number, but the second to last and the third to last one. So 52. So 52 pips. So let's say you can capture 50% of the daily range, and the range is 52. Then that's probably close to about 25 pips, right? But this is a news day. So we should get a little bit of a news premium in that. So we might get a little bit of a news bounce in that, where we might get. And so let's say we pull back to one of these areas like the pivot. And even if we got as low as a 78.6% FIBA, which happens to be the S1, and you'll find some type of overlap. When you can find overlap between the pivot points and Fibonacci, that's going to give you a confluence. Because think about different types of support and resistance as like political parties. Well, I guess don't, but it'll help for this analogy, right? Some people believe in pivots. Some people believe in Fibonacci. Some people think Fibonacci is hocus pocus. Some people think pivots are like old school, they don't work anymore, right? However, when these levels coincide, you're going to have both parties, the pivot people, the Fibonacci people. If you throw a moving average on there, there's people who look at the golden cross and they're looking at the 50, 100, and 20 moving averages. So there's many of these types of round number people. You've got GAN number people. There's all kinds of people, seeing that, wow, this is an interesting area of support or something like that, right? So you got the moving average people, you have the Fibonacci people, you have the trend line people, So, the trend line people might say, well, look, prices, so we got some type of a pattern here, some type of triangle or something like that. So now, if they're, the levels don't match, then that's when you have that, confusing data. Because now you've got some people are, and the fibs are far away from the pivots, but when they do, we have that confluence of indicators, then what that's going to do is going to create more people, you know, the 100 people who are trading pivots, and 100 people are trading Fibonacci, and 100 people are trading moving averages, and if it all appears in the same spot, now you got 300 people all but believe that this area is something to look at, something to pay attention to, and that's where we want to okay. So that's, I am slightly bullish on the euro. I mean, I think we could probably even, since we rallied up so fast from that one spot 176 area, we may come back and test this area, right? So that would be yeah, down here, S1 pivot here, very close to the 6-to-1-8 pivot on the 4-hour chart, right? Because we are battling underneath a big giant downtrend, right? I mean, but we're also coming at some key support as well from way back in the day, right? One spot 1706 is like a round number, and we're just sitting right above that. Okay, that was a low from. Let me get the date on that. The date on that is that was March 30th, 2021. Yeah, March 30th. So we got this old low. So price has a memory, has a history. You may have forgotten your wife's anniversary. I remember we got married January 2000. So I know automatically, look at the last two numbers, 21 years of marriage. Hey, pretty cool, right? And we got married on like Martin Luther King's birthday, which was like the 16th of January. So I mean, I got it covered, right? So price has a memory, even though you guys may not have a memory of certain things. And so this price is a memorial, and price will, might work its way down to that area. I mean, especially if we're kind of close, it might say, let's go ahead and, see, like it kind of like went down there a couple of times. Let me try that out, right? And it might travel down there through the night, and by London, that's like 87 pips. It could possibly, we could get this pump and dump, where we pumped and then we dump, and then they get everybody on the wrong side of the trade, and then we can go ahead and look for prices to rally from there, right? So that'll be cool, because ideally, the double bottom is like, one of the levels, because you got all this history back there that you would like to, other people are seeing it, you want other people to be involved too. We have this long wick, another long wick, and it gets scalped down to the 30% retracement. It might even come down to the 50. However, if price broke above that high of that candle and started moving right now, I would seriously, I would look at flipping this to go something that we would get a little bit of a confirmation here. We'll see, because I'm gonna move this out of the way. We got our upward targets. I'm gonna get this out of the way too, right? And so we, even on this 1 minute or 5 minute chart, we have lower swing lows and lower swing highs for now, and so we can connect this trend line here. We can connect this last swing, this swing here. The swing is the point. Basically, this is the point. I connect points, and then we can connect that point. So we have 2 points that make a line. It's old geometry 101, right? Price rallied off the moving average, moving into the trend line, and then we're looking for price to, again, we're not trading the ECB right now, but I'm just kind of like showing you. So these are the things that maybe while I'm trading the announcement, I'm not really talking to you, because I'm like really focused, but just on a granular level. And no, this is still Asia session, fairly slow, so I can explain what we're doing when we're taking these Fibonacci news trades, right? Right now there is no news I know of, unless there is something, some minor announcement. But let me know. Give me a thumbs up, or I want to invite you over to the forex cash machine, to our free Facebook group. It's called the forex cash machine, and you can join, and participate in our vibrant community, our workshops. Hey, there's JD. He says, Greg. I'm gonna give him a like. Yeah, there he is. And I see Pedro. How you doing? Yeah. So you come over here. You can go over. The four is called the number 4x cash machine, and you can also. I also have. You can go to THE the FOREX cash machine. Come and join us. We're a vibrant group, exchanging ideas, and you can learn a whole lot. And try me out. Let me know what you like to learn. Ask me some questions. If something, hey, I see. If you guys are still here, underneath the video, and you're in the comment section, let me know. Maybe there's something you want me to analyze or look at, or something like that. Because I think I got the technology straight where I can, you're kind of nervous. You're on camera. You got all these moving things. I got banners going over here and spinning things over here, and streaming to all these channels here. It's you're like, oh yeah, I got a trade too, right? Yeah. So it's a little overwhelming, but let me know if there is maybe something you want me to take a look at. But we could also look at, and this thing is we're rallying into. I mean, we got this big candle here, and we're rallying into that. So let's see, we have because what we can take swing points. This is a swing point. We dropped, we popped, and we dropped again, right? We can take a Fibonacci from this. This is even on a 5-minute chart. We can go from that top to this low, right? And we're coming to the 38%. I mean, the 23.6% Fibo, right? So I said, very rarely does this hold. So we may break this line and head up to the 38% level. And there's a wick right there just before the 50. And this was a major support zone on the 5-minute chart. That's what we call major, right? I just wouldn't want this to stop me in before the evening time. I wanted to kind of continue, make its way down. And see, do you see that, the rejection from the trend line, right? So you want to see that we have a rejection, some type of really long wick candle. Looks like a comet, right? Or a shooting star. And so we can draw these small trends, and we can look for prices to move. Now again, prices are going to be moving really slow during the Asia session. In fact, the my market heat map will show you like a percentage change. So it may be 0.02% or 0.06%. Not really a big movement in the market. You want to see, and then we got a little break there. Again, we're on the 5-minute chart. And each move is very small number of pips, right? But if we, again, I'm looking for okay, here we go. We're gonna hit that here's that old high right there, and then here's that 38% retracement coming into play. Look at that nice little turbo move, down 1.4 pips. We're on the 5-minute chart. Yeah, I would stop into this trade yet. I want this thing to turn down some more because it's still early yet. Midnight usually is where we put the trades on. Okay, so let's see. We got another swing high right there. Then that's that old wick. And there's our trend line right there, right? And I'm going to move this buy stop out of the way because I don't want to be in a trade yet. Because rallying before the news announcement is usually a fake move. Okay, so we're, and in fact, if we move up to here, I might take him on with another short. Or we're at the 38. Let's see if we can 117.90. One spot 1790. Give us a nice double top. Got my finger on the button. 50% retracement. It's just a little higher. One spot 1791. And it's creeping ever so slowly. One spot 1790 by 90. I mean, like 0 pips spread. I mean, no spread at all. And it's like a big candle, kind of like, it's like a bait on a hook. It's like twisting around. Hey, there. Okay, let's see. Okay, so we so 1 minute target, and we so we've got another minute. Let's see if this will pull on back. We got our second position. We got on at 1 spot 17. You're getting like a preview of ECB right now. We have a moving average there at 50% retracement. And our next 5-minute candle comes in at 9:40. So we got about 2 minutes. $9.39, 618. There's 618 Febo, 1 spot 1792. We got 25 seconds, 24, 23, 22, 21, 20, 19, 18, 17, 16, 15, 14, 13, 12, 11, 10, 9, 8, 7, 6, 5, 4, 3, 2, 1, 0. New candle. Man, it's kind of a gapper too. See, I kind of gapped up. And we're channeling the 618 with a new green candle, and we tag the 618. So from here to here, 3.6 pips. And we have a new 5-minute candle, and it looks pretty bullish. Again, we're on a 1-minute chart, and we're like inside this, in this candle right there. One spot 1792. And we blew through these fibs with on the 5-minute chart. Let's go to a 1-minute chart. Let's look at the one. And looks like we're already at the 786. And we had a higher low, and a lower, we had a couple of double bottoms right there, 786, and it's breaking that one. This is pretty interesting that we have another wick there at the 88.6. Pretty good screamer right there for about 5-6 pips. So here's the 786 area, 942, and it might run until like 10. So we got like 10 minutes on that. But what's interesting, we have not hit significant Fibonacci levels. The 23% was significant, but rarely holds, and the 38% retracement is typical, and then sometimes it comes to about half the move, right? So this could be the pump before the dump before the pump, right? And this is pretty early for a candle of this size. One spot 1793. And type this back. Let's go. Appears a little slow. And so we hit that 78% retracement, and we're about 945. So let's see if we a little bit of a move here. And also let me check the questions in the box. I have I'm just trying to pull up this chart with a bunch of it has the support and resistance lines on my trading view. Trading view logged me out, so I gotta log back in. And okay, here we go. This trading view. So here's our trading view. This is where I have the. So these are weekly. The blue lines are weekly support and resistance, and there's the whole number where we hit here, and then so now we are making our way back up. And again, we have this. Let me get rid of this, right? Remove this, remove, right? we have this topping pattern here where we've hit in this area multiple times. And we may come back and even test that area again. I mean, we tested the bottom of the channel, so we would look for a break of like even 1805. But these weeklies have been pretty powerful, where price, once it hits it, they drop and drop and drop, right? And these weeklies go way back, like for like how far do they go back? Yeah, they go back to like 2004 or something like that. And when price hits them, it punched through, they came back, right? Oh. And then rejection there, bounce there, drop below. So it plays around this line pretty often. But once it gets clear, it takes off like gangbusters, right? Go to 5 minute. But it is stacking pretty hard right now off these lows. One spot 1795. So now we're at the 100% expansion of that high, and it's really climbing, right? Again, 15-minute chart. Okay, I'm seeing some. Oh, okay. Oh, very cool. Okay. Yeah, so we are pushing up, and one spot 1795. Very, very interesting move here from these lows that we had. We had already taken the short down, and so we shorted right, got out right at the bottom. The continuation here is pretty big. So we take our last swing, and we can take a fib from the old swing high, and then go down to the low. We're looking at we're at the 50% retracement of this down move is also a fib, right? And then we have a confluence of downward and upward fibs right here at the 1 spot 1798 area. So that would be probably like the area of last resort there. I mean, we go back to the old high as well. Rally is kind of telling too that if we are rallying before the ECB announcement, this is kind of very interesting that this could be one of those pump and dump kind of moves to kind of like get people excited about the move, and then we wind up at the announcement and it collapses. So it might be a pretty interesting trade there. So 50% retracement we've hit, and if you get another 10 minutes, that'll be 10 o'clock, and we'll see if we get a 10 o'clock reversal here, because a lot of those algos, they have clocks built into them, and so what happens is that they'll take major moves or change change direction at when like the clock hits like a 30-minute mark or hits a 4-hour mark. Okay, and so sometimes you give up on a trade. You know, you have a time stop, kind of like, okay, you know, this goes at the 10 o'clock. If it's still rallying there, then you know it's over, right? But let's say you say, oh man, this is really going against me. I'm going to get out at 9. You get out at 9:51. You got 9 minutes left. If there's a way you can hold on to it for like 9 more minutes, and what I've found is that at the hour mark, you get this big turnaround, right? You get this big boom right there, right? So in fact, this low was